Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is April 27th and I'm doing a review and outlook for the US dollar. This is the US dollar's daily chart. And in review of last week's video, I had shown you this rather broad rising expanding wedge. It is technically a negative pattern. However, the price of the dollar just shot up right through it and totally denied the pattern, totally blew it out of the water, and it's really can't be drawn anymore. It's obsolete, and the reason behind the rise in the dollar was all the good news coming out of the economy. We heard that durable good orders were rising at the fastest rate in 7 months, and we also had a better than expected, much better than expected GDP report. It will be likely revised. It could be revised up or down, and however the market interprets that, then we will see. But right now it came out better than expected, which helped the dollar rise. Actually, it came out yesterday on Friday, and we had a mixed response out of the dollar, but the rest of the move up from the dollar over the last week was mostly due to good earnings reports coming out of several large companies and in the U.S., and it just helped to show investors that the business mood is really hasn't died down much at all compared to what we're hearing a lot in the news as far as the media's bias. And so we're seeing a opposite of what we've been hearing, that the economy is slowing. So but yesterday we had a mixed result, and I think that was mostly due because people are now a little bit unsure of what the Fed might do. Good positive report says that the Fed may try to tighten a little bit more, but I'm really kind of doubtful on that. I think they're more worried about what's going to happen. They don't want to start a recession, and are worried about really being a cause of one. So I think they are just going to be sitting back on their hands for no matter what happens in the markets. So that's as I just said, this pattern has been denied, the one from last week. So what I'm going to show you instead is a new negative pattern. Really, I was going off of, as far as last week goes, is what the pattern that we've been seeing out of the dollar. A lot of up-down scenario. It's just been up 1 week or two and then down 1 week or two, and the same old, same old. Now, it has had a general line of moving up. However, I wasn't sure last week if we would see it continue the pattern of falling after it touches the upper 97 level, but clearly we didn't have that. It broke the 97.50, it broke 97.70, it even touched above 98.15 to 98.30, and it settled back down, closing below the 98.15 level. So both of those levels will stick, and we will remove the 97.70 level. Now comes very solid support level, because the dollar held resistance several times at the 97.70 level, as we can see. So now it is support. Now we can turn that into a green line, and we will delete this line, the 97.50 level. So that removes all the bad from the chart and the good and so on. So anyways, as far as next week goes, we have a ton of news coming out. So we have core inflation, consumer spending, FOMC statement. We also have the non-farm payroll come out, which is expected at 190,000. We had 196,000 the month before for March, so we'll have to see how April comes in. But I really have a feeling that this is what the ADP report and the non-farms payrolls will probably weigh most on the dollar. And it really matters how that, it may shoot on straight up through, but it really looks like we're getting overextended in the MACD as well as the RSI. So I'm expecting it to come down and confirm the rising wedge pattern next week. So that's it for today and the rest of this week. I thank you for your time. I look forward to speaking to you again next weekend. Take care and God bless.